Welcome to the BAI Deep Dive on Digital Transformation. My name is Holly Hughes and I'm the Chief Marketing Officer at BAI. I'm excited to host a conversation today with two FinTech leaders who are doing some really great work with banks and credit unions across the country to help drive innovation and digital transformation. We have Jason Henrichs with us today, who is the Managing Director of FinTech Forge, and we also have Kevin Lewis, who is Senior Vice President, Head of Sales and Partner Growth at Amount. So welcome, guys. So great to have you here at BAI's office in Chicago. Looking forward to our discussion.
Thanks, Holly.
So we will go ahead and jump right in. I think digital transformation is definitely on the minds of financial services leaders. BAI goes out and surveys the market pretty frequently, and we talk with both bankers and consumers about different trends. And when we recently went out and asked bankers about business priorities for 2020, the number one priority came back as improving the digital customer experience. So certainly very relevant. Last year, what we saw, the number one priority was deposit growth. So you can argue that they've maybe discovered that a way to get deposit growth is by having a really great customer experience digitally. So where I wanted to start today was to talk to you guys about it is a buzzword, it is out there. I think leaders know they need to be on top of it, but what it means to people can really vary drastically. So in the work that you all are doing, what is digital transformation, and what do you think some of those misperceptions are that leaders have?
Kevin?
So it's, with Amount, we're working with a lot of super regional banks and mid-sized banks across the country, and it's really absolutely top priority across all of these banks and something they're talking about and trying different strategies and trying to crack the code on. I think ultimately the traditional branch model is broken and customer expectations have changed pretty dramatically in the last 10 years from, whether you call it the Amazon effect or whatever it is out there. But in our office, our average age is, in the mid to late 20s, and we talk about how to transform the branch experience, and most of the people in our office haven't even been in a branch for 5 years. So people don't really want to go into a branch unless they want to they're working on a more complicated transaction like a mortgage or something that requires that one-to-one interaction. So I think a lot of the banks that we're working with are trying to find the right blend between physical branches and expanding into new markets and overlaying that with a really strong digital presence across all the retail bank products.
Great.
I think you hit part of it on the head, and one of the things I find frustrating in the work we do with banks is they get hung up on the buzzword. Mm-hmm. And the reality is digital transformation is a means, not an end. And so when you ask them about their strategic priorities and they say digital transformation, it's like that's an important priority to develop as a competency, but towards what end? And you need to think very carefully about, is it around taking friction out of the system, which is an important thing that digital can do better? Is it around creating and delivering new sorts of value that your customers can't get elsewhere? But digital by itself really falls pretty flat unless you find a way to focus. This wasn't even an incumbent, it was a challenger bank recently told me when I asked, why should someone sign up with you? And they said, because you can do the whole thing on your phone in less than 5 minutes. I'm like, that's great as a way of getting people through the funnel, but that's not going to fill your funnel. No one says, why am I going to go, apply for that account? Well, because I can do it on my phone. Unless there's some other thing driving why you need to change your account. You don't have an account, you're moving, you had a bad branch experience. Those are the things that become important, and digital transformation just enables it.
Yeah, great point. So let's talk a little bit more about that in terms of where do you see the opportunity for banks to use digital strategies overall to solve real business problems?
Yeah, I was going to say, I think that there's been no shortage of news around how many billions of dollars are being invested by banks across the country to improve the digital experience. And I think, we look at it and we see that a lot of that has been more defensive spend driven. There's been a ton of investment on what the customer sees, and also how do we retain our existing customers? How do we improve the online banking experience that you can log into your mobile phone, view your account balances, move money around, which is great. But I think ultimately we're just scratching the surface on the automation and the digital transformation underneath that, which is really where you improve the experience. I mean, I'm sure everybody can think of examples where you're calling into your primary bank and you have money in a checking account and you're asking for a loan or a credit card, and they're asking you for a ton of information that they should already have.
Yep.
It's frustrating. I mean, it's like nails on a chalkboard frustrating.
Right.
And so the problem is you can you can repaint the house, right? And it looks nice on the outside, but underneath, we're just scratching the surface on that next layer of investment across all these big banks, and that's where I think real customer experience gets changed. When you can automate a lot of manual processes out of that system, centralize all that intelligence and all that data onto a single system to be able to authenticate customers across channels and across products, which I think there's a long way to go before that happens, but some of the banks are starting to get it. And I think the biggest challenge those banks have is that a lot of those decisions are still siloed. So you've got a digital leader that's focused on effectively that outside front, but they're really just putting a lot of really nice mobile-driven forms on the website. But behind it, you don't have that alignment from the risk side and the compliance side and all the different components that they're still holding on to the old legacy thinking about if someone's in a branch, we need to verify this, this, and this, versus leveraging the tools that are out there that are available and being used by other tech companies in the space.
And you've heard me say this a lot, Holly. If all you're doing is putting digital lipstick on an analog pig, you're not actually pushing it forward.
Right.
And if you're just digitizing existing processes, even if you're automating them, to Kevin's point, like that takes you one step further. But maybe you need to rethink the process entirely because too often these are remnants of this is the way we've always done it, and therefore let's keep moving it forward. Recently we had one of our banks came to the recognition when we were in a work session, and the chief credit officer said, I just realized we treat every customer exactly the same. And everyone's like, isn't that a good thing from a credit perspective? And he's like, no, I just realized we're talking about fully automating and the need to pull outside party and all this digital transformation. The reality is our capacity constraint is we have customers that we've known for 20 years who've borrowed and repaid us millions of dollars on the commercial side, and we treat them as if they're a stranger who just walked in off the street in terms of what we gather and what we do. He said, forget about even the basic information, like we should know their address and it should be pre-populated, that automation, but we should also have an express lane where we rethink the real fundamentals of what we deliver based on who that customer is.
Yeah, and interestingly, we had some bank leaders in our offices last week talking about a bunch of different trends, including digital transformation. And one of the things that one of the leaders mentioned was it's almost a red flag if there's a, quote, digital department within a bank versus it really being integrated and a priority with multiple leaders so that it is a more consistent customer experience.
Yeah.
And you've got both sides,
This is a
working
frequent
together.
debate with, so our Alloy Labs Alliance has grown to 40 banks. And I would say we have 4 or 5 different flavors of how they think about it. Do they have a chief digital officer, is one flavor. And some of those who had a CDO have morphed and said, no, we actually need a CDO in every part of the business now. Others say, well, we're not big enough to support that much growth in headcount, so they created a digital department, but as a core competency, and they're matrixed out to everyone else. And I'd say the third most common flavor is actually, let's just get everyone thinking more digitally in how they approach things, across the board.
Yeah. Yeah, and another thing that we talked about with these leaders when they were in was, initially I think at BAI what we saw in those early days of digital is that it was a cost savings play. How can I make, help with margins and increase operational efficiency and use digital to do that? They really weren't even thinking about customer experience. And I think now we see more of the customer experience plays. You mentioned a lot of that, Kevin. Where do you continue to see opportunities on both sides of that coin? The operational efficiency is still very important, and it's the driver for a lot of those customer experiences that you mentioned. Where do you both see those opportunities operationally as well as customer experience, where we're at?
Yeah, I think that the key is to the point of the challenge and the opportunity is that you've got to have the right alignment, right? So all of the owners of the individual product P&Ls are charged to achieve growth. All the banks need to grow assets, they need to grow deposits. In order to do that, they've got to work across the entire kind of bank and different cross functions to get that alignment. So I think with any of the banks that we have worked with, there's a common thread, which is you have a very senior executive, sometimes even the CEO of the bank, that is driving this with a very singular goal-driven approach that this is a big priority for the bank. you have a P&L owner who understands the unit economic impact across the end-to-end solution. And then you have somebody, whether that's the digital transformation leader or somebody that is in kind of a strategic partnership role that effectively can broker that deal across the entire bank. Internally, we call it kind of the triangle. Do we have the triangle intact, right?
Yeah.
And until we do, it's hard to invest a lot of resources behind it because we've seen the deals kind of fall flat. So
Okay.
I think in order to make these big investments and put those chips on the table, they've got to weigh out all the long-term impacts, which include things like, funnel pull through or increased volume, which is great, but you're also going to be able to find tools that's going to decrease the fraud that they're seeing. I think fraud is something that a lot of these banks 5 years ago were not talking about, and if they were, it was a single event that then they captured, they got the recovery, everybody claps their hands, back to BAU.
Yeah.
The fraud landscape has drastically changed, and it's changing month to month, week to week, because of these really sophisticated digital fraud rings that are coming. So it's a very different environment going from where they've been to where they want to go. But then you look at, by driving this automation, the operational expense savings, which is not an immediate impact because you've got to implement it, you've got to kind of stabilize it, you're adopting a whole new process of doing things. But I think if you look at the increased volume, the decrease in fraud that they can achieve, and then the overall OpEx decrease, there's a massive savings out there, but it takes that kind of full triangle and full alignment from the top down.
Yeah, and a little different way of looking at it than they might be used to, and that more siloed approach.
Yeah. And I agree with what Kevin was saying. I think one of the important things to pull out is the difference between user experience and user interface, because too often when we talk about digital transformation, we're clearly thinking just about what the user sees, not what the entire experience is, which incorporates everything from what they're seeing on their screen to the back office and then how the product comes back to them.
Yeah, a little bit, I guess, a new buzzword or a newer buzzword, the phygital combination, physical, digital.
That was the first time I've seen it. I like it.
It's kind of fun. You got to practice it a little bit. And that brings to mind, too, this balance of human versus digital, what's appropriate and when. And then also, we've talked with a lot of bank leaders about, what are you doing to make digital feel more human? One of the banks that we see doing some interesting work that we've talked to is Umpqua, and they've got this Go-To Banker app that is a real banker and a secure texting platform that consumers can go in and select which banker they want to work with and then have that secure texting capability. That's just another way to digitally interact with their bank, get done what they need to in a platform that they're very comfortable with because they're texting friends and family all day long for different things. And interestingly, what we heard too in terms of how people are selecting their banker, what they saw was they're selecting based on not necessarily banking expertise, but on their just interests and hobbies and things like that. So something that we've seen out there, curious what you guys are seeing in terms of who's doing well with that humanizing digital concept or striking that right balance between human and digital.
It's an interesting challenge where, much like putting the digital lipstick on the analog pig, thinking about humanizing digital, we need to recognize there's a difference between being personable versus personalized. And it turns out that machines are much better at being personalized, remembering what my preferences are, what they've offered me. If I have major bank with a blue logo that I walk in to do my deposits and they offer me private banking yet again, right? This is not a positive experience because I tell you no every week, that I visit the bank. By contrast, when you interact with a machine and you're dealing with something complex and it's not understanding you, being able to interact, with a human or something human-like, but also not starting over. That's one of the biggest challenges we find is as you cross-channel, how do you actually not just enable them to communicate the how and where they want to, but actually make all of that information available on the back end?
Yeah, I think we're seeing the first big wave of banks taking a leap into the digital space, but because of all of the constraints that they have being so ingrained in these old legacy systems, what many of them done is basically leaped into the digital space, and it's ring fenced off of everything else. They basically have, here's our branch in footprint model, here's our new digital national bank. But the next wave of that is figuring out how do you combine the two to have the right mix of both. And I think that's where the challenges, and that's what we're going to see over the next couple of years, because that's where you've got to have this kind of continuous kind of omni-channel experience, whatever you want to call it, where a customer is going to initiate some sort of interaction because they need a certain product, and they're going to start it in one channel, they're going to want to finish it in another, and vice versa, and be able to do that without interruption, that the banker can come in and help and know exactly where that customer left off if they need to help finish any sort of application. So I think right now you see kind of a ring-fenced approach where you've got two different systems, two different approaches, and in order for the two to come together, you're going to see kind of this next wave of what a branch looks like that is pretty exciting, right? You see what Affirm has done with the Walmart and kind of transforming that point of sale installment loan experience. You see Amazon Go, which is a really cool experience to go into. I mean, I think there's a blend where these bank branches become more of a sales center with no transaction, no cash exchanges, no nothing. It's more of a way to get assistance or ask questions while you're completing whatever application you're doing on your own personal device.
Well, I think the ultimate extension of that in omni-channel is not omni-channel to the bank. The bank actually needs to become invisible, and we're not quite there yet. But it's easy for us to forget because we're in the industry. Banking is a means itself, not an end. And so we might be digitizing the means right now, but ultimately no one says, I need a checking account. No, I need somewhere to store money to be able to go conduct commerce. No one wakes up and says, I need a mortgage. They wake up and they say, we're moving, we're having a child, something has happened as a life event, or just our preferences have changed, and you're getting a house, you're not getting a mortgage, right? The mortgage is part of that. And so we're going to see more in what we talk about as the embedded commerce, and I think we're even going to move eventually all the way to invisible banking.
And one of the roadblocks that we see to this is the legacy systems. Your earlier point, Kevin, about calling in and expecting that the call center understands your full account. One of the challenges that information resides in these different systems, which is why you have to keep repeating that information. What other roadblocks do you guys see in terms of getting us to this invisible banking state?
Well, part of it is, the banks have enabled their tech providers to continue to do this, because on one hand we say, we need all of this data, we need this access, and then the next thing you hear from the bank is, we just renegotiated a 7-year contract with our core, continuing the same horrible contract just at a cheaper price, and still don't have access to the data. And so I think the banks that are going to succeed are the ones who right now are rethinking their entire tech strategy, because right now, for many a bank, they start with, what does our provider offer? What are we going to put on top of it in terms of rates, terms and conditions, and our logo? We then determine our product suite and we give it to our customers, but we're ending with the customer, not starting what do our customers need and work backwards to what's the best technology to deliver that. And it's a big mindset shift, right?
Yeah, technology and mindset probably equally, challenging. Any other roadblocks that you guys are seeing to people really getting there?
Yeah, I mean, I think you're spot on. I mean, the whole decision around different investments the bank wants to make, whether it's digital experience, UX, UI, vendors that they want to contemplate, or it's fraud and verifications, or it's different ways that they're dispersing cash across the board. These historically have been decisions that are made in silos. You have a marketing team working on how to improve that customer experience. You have a different team focused on which channels they want to acquire customers through. And you have your credit risk teams, you have your fraud risk teams, it's all different silos. And when you go from a branch environment that's relatively static to a digital environment that is constantly changing, every single decision that you make in any of those silos impacts the ultimate profitability of a product. So you can make a decision on the UX UI that's going to only be able to collect a certain number of fields that doesn't plug in well to different third-party data providers to instantly adjudicate customers, and device fingerprinting and all that, where it impacts down the line is going to ultimately have pretty major consequences when you go digital, whereas previously that was, when you're in a physical experience, it wasn't all that impactful. Yeah. So I think it's all about kind of collaborating and viewing each product as how it works together from start to finish. That is a challenge that a lot of banks are trying to kind of crack the code on now.
Well, and I disagree slightly on the word finish, not that you meant it there, which is for a lot of banks, it's also new that most projects aren't going to finish for a long period of time. It's not about when the product launches. It's not when the technology launches. That's actually just getting you to the starting line. To Kevin's point around this iteration that goes on in each incremental step. It's not like a core conversion where on one horrible weekend we throw the switch and on Monday it's all done, right? Except for some remediation. Once you actually launch the product, now for the first time, are you actually learning how customers are interacting and using it? And the beauty of digital, if you've built it right, you can continue to iterate in a very data-driven way, which is very different than something that's brick and mortar or a fixed product that, hey, we're going to build this and it's very static because all we think about is how do we process it on our mainframe, and once that's programmed, that's not adaptive, right? And so we launch it, we pat ourselves on the back, we walk away, and we don't stop to think. It's like, well, could it be doing better?
Well, I mean, the data feedback loop has completely changed. So we work with a lot of large banks. We've got 8 different banks on the platform that over $1 trillion in assets and 28 million customers represented across our different bank partners. And we've had multiple instances where there's like this light bulb goes off of like, whoa, this is powerful, where they were in an environment before where they would launch a product or launch a direct mail campaign and fire off millions of mailers, and they would have a 3 to 6 month ultimate feedback loop of what kind of response rate was happening, what credit policy adjustments, and they would review it quarterly or twice a year and then make those adjustments through their policy. And we've launched banks and they go, and we're within the first week and a half getting feedback loops and saying, here are the type of credit policy changes you need to adjust to increase your conversion rates, and have this, campaign perform better. And that's just something that they've had to change their credit review process and their committee
Metrics
policies and
in general.
all the different kind of core processes that a bank is set up to do. Just, it's different in the digital space, which is exciting, but it's been exciting to see the banks adapt to it.
Yeah. We've touched on fraud a little bit, but I'd like to go deeper there because, we do see that as such a big issue. I mentioned the BAI Banking Outlook survey that we do. We look at both financial services leaders as well as consumer perceptions. And in this most recent study, of the consumers we surveyed, about a quarter of them had experienced some type of fraud on their primary account. We've all been there. It's awful when you've got to deal through that or work through that. And when it came to, well, how did the bank resolve the issue for you? Only half felt like the bank did a satisfactory job in handling that. So definitely still something. It gets more and more complex, especially as we get into more digital strategies. What do you guys see there in terms of, again, some looking at that balance with how much friction do you put into the process so that you're keeping the consumer safe, but then still giving a good customer experience?
Yeah, I mean, so our perspective is, and something that's consistent across all the banks that we see today, is that you have, back to the legacy tech provider issue, you have, if you think about the 3 primary channels, digital, branch, and call center, and then kind of the primary product suite of deposits, loans, and credit cards. You have deposits, loans, and credit cards on 3 different systems, core old legacy systems, and then the processes and the tools that are being used to authenticate customers for things like account opening are different across all those channels. So now you've got a matrix of 9 possibilities based on which product and which channel that a customer is coming in through. So there's kind of a double-edged sword there where when a customer comes in, like we talked about before, you're asking a bunch of laborious questions and putting a bunch of friction in the funnel that shouldn't be there, which is frustrating. On the flip side, when a bank does get hit by fraud, it's very hard for them to figure out where it's coming from because none of that data is talking to each other. And so I think that the biggest challenge and also opportunity is to centralize that data, that you can view it and leverage it across channels and across products to minimize friction, and then also be able to see trends pop up and be able to stop the bleeding before, or as quickly as possible, and eliminate fraud that's coming in through the deposit channel in the branch, but it's really you're seeing it in the digital channel through the personal loan product. So that's a trend that we're seeing across the board that a lot of banks are focused on fixing.
Great.
Yeah, it's the interface between the technology. I was an early investor in a fraud company back in 2005 that was already looking at this on how do you actually take unstructured data, because this is one of the biggest challenges. Fraud is going to happen. and it turns out the bad guys are pretty adept at probing and finding something, and once they do, they exploit it. But once it's done, they move on, and too often we're looking in the rear view mirror of trying to prevent fraud. It's a little bit like, why are we still taking our shoes off to go through the airport screening? Because of something that happened once
Right.
versus the prospective, how are we looking and finding and adapting,
Yeah.
continually. And I think that's one of the biggest challenges is we take a big iron approach to how we're trying to solve for fraud. We need to just be a lot more nimble.
Yeah, and I think the thing there that's interesting to think about as well is that in a lot of the banks, this transformation into digital is new, right? So, regardless of whether you're Marcus at Goldman that has all the resources to build their own, have a lot of smart people to create all their own models, it still has taken them 2 to 3 years to actually collect enough data and ingest that data and know what to do with that data and build the right models to effectively predict fraud in these digital environments using 10, 15 different third-party data sources. That just takes time. So I think that you're seeing banks get smarter to figure out ways to leapfrog that kind of that learning curve to be able to truly go open market and improve those experiences without doing it themselves. And I think that's where the kind of the philosophical debate of what is core versus non-core for a bank to do, and what's something that they need to own in-house versus what's something that they should feel comfortable reaching out to partner with certain companies that do that better and do that for their core competency. And I think the banks should be focused on creating better products, building better relationships, and meeting their customer needs. And I think that the banks that are able to reach out and partner in certain areas like fraud and figuring out how to leverage data across all these different systems are the ones that are going to be able to leapfrog the others that don't.
Yeah, absolutely. And open banking is definitely something that's out there. I think a lot of different opinions that we see in terms of can it even work in the U.S. with the type of banking system that we have? What do you see in terms of the future of open banking? Do you see it coming to the U.S. and what are the opportunities there?
Well, we're not going to see PSD2 happen here, that regulatorily it's going to be mandated. But the fact that it did happen already in the EU, and you're seeing some major banks that have very large US presence have already taken the pain and are actually finding some of the benefits, they're the ones who are going to bring in. It's going to be a market-driven event here that I think the challenge for US-based banks, if they're not paying attention to what's happening first in Europe and then what's happening in Asia from the payments point of view, they're going to be surprised because it's going to be a double whammy hitting both shores.
Okay.
Yeah, I mean, I think that the U.S. regulatory space is very much behind where it is in other markets. So I think that you've seen a little bit of a normalization there, and a lot of banks have kind of reorganize themselves internally to get a little bit more aggressive and be able to do things now in the digital space where compliance, I think for a lot of years was really kind of a blocker to anything around innovation. But I think that until the regulatory environment shifts significantly in the U.S., it's a little bit, you're not going to see the type of changes that you're having in the UK.
I disagree with that because I think the banks themselves are going to do that. I don't think our regulatory regime is going to catch up. It's going to be the market that does it. You're going to see the people, the two large Spanish banks that have big U.S. presence, the UK banks, even though they may or may not be part of the EU any longer, they've taken on PSD2 and what they're doing. We're going to see that those banks start to bring it here. And I think our regulators are going to be the ones, the smaller banks that aren't paying attention to it, or the bigger banks that have their head in the sand are going to start feeling the pressure. And then the regulators are going to wake up to it and say, what just happened? The market just did like a fundamental shift in how it's operating, and it wasn't mandated by us. And that's going to be kind of awkward and uncomfortable for them.
Yeah, interesting for sure. And so just a couple closing questions, a little bit more forward-looking, like that concept of open banking. Where are your organizations focused for 2020 in terms of priorities, and where do you see banks focused into 2020?
Yeah, so we're very much driven by our member banks in terms of what our priorities become. And I would say the number one priority across all of the banks, regardless of size, is data availability and what they're doing with the data. And then that manifests itself in a variety of different ways, from how am I doing better with fraud, how am I doing a lot of RPA, how am I using that to better serve my customers, how can I create different digital products that actually are ways that I'm not just taking friction out, but I stand out, that it's a reason people would want to come and bank with me. But it all starts at its core, pun intended, with how do I actually solve my core problem?
Yeah. Okay.
Yeah, I think at Amount we are laser focused on reinventing the entire retail bank experience and finding this perfect blend of digital and physical. And that means, requiring things like an email address for a customer to bank, any digital experience, the Amazons of the world. I mean, it's all based on a digital identification, and I think with that you can do a lot of incredible things, and where you can decrease OpEx and minimize your reliance on these legacy systems and still provide customers with your really world-class customer experiences that they're not used to having, by being able to then leverage all that data that you have across these channels and across these other products.
Yeah, and change does not happen quickly in financial services. It can take a while. I think a lot of times until they see that real value, they're not willing to take that pain, and there is going to need to be some pain. Do you have a feel for 5 years from now? Do you think we can expect some bigger, bolder change in the industry, or what do you think we would be talking about at this, table, 5 years from now?
Well, I hate when we hear from a bank that they're going to be a fast follower. They're going to wait until they feel the pain, because the reality is, if you look at the Tour de France, when the breakaway, takes place from the peloton, right? If you're not towards the front of the pack, you're not keeping up. And the reality is a lot of banks are just pumping up their tires. They're not even in the pack right now. So I think we're going to see those who are breaking away, who've developed the competency of managing, doing something new, being aggressive about testing and moving back and forth, and they've created all of the systems, processes, the risk management, the underlying infrastructure. We're going to see really cool, bold things happening. And for those who are still pumping up the tires in the background, we're going to see a lot of them really trying to figure out the so what for themselves. And that might be 5 years from now, but it certainly is not more than 10.
Sure.
Yeah, I think I'm optimistic. I think that you'll see almost a little bit of a swing back. You look at over the last 15 years, the major money center banks have been really devouring market share in a lot of the core consumer credit products because of that advantage they've had to spend and invest in digital. And I think that you're seeing the first big wave of kind of the next tier down of banks that are making those investments and catching up. And with that, I think you'll see a little bit of that market share being taken back by a lot of the super regional banks.
Great.
Yeah. One last on that, where I see some of the real interesting innovation is actually on the smaller side. The ones that have woken up to, I can't do what Kevin just described, which is make the major investment to play catch up. Maybe I just need to figure out a new game to play. And they're getting hyper-focused on community, not defined by my branch footprint, but how do I actually define who I serve and how I serve them in a way that you're not going to see the major money center banks be able to do, because it's not big enough. And so I think that creates an interesting opportunity, not only for those banks, regardless of size, but for the customers they serve.
Great. So great point to end on. We will end on an optimistic note. Definitely a lot of opportunity when it comes to digital transformation. Kevin, Jason, thank you so much for joining me today and having this conversation. I think we've given financial services leaders a lot to think about and consider as they're making their plans for 2020 and beyond. So appreciate it.
Thanks, Alex.